Okay, so last week we had done question 1. So today we're going to look at question 2. I'll give you a copy of that question 1. We're going to look at question 2, October 15. It is a 2-part question. Part B is a few marks on fair value measurement. So we're going to deal with part A first. Part A has a number of requireds. The first required is journal entries. Prepare journal entries for information 1 and 2 above, including the tax implications. Okay, so this is important. We often forget to do the tax implications for journal entries, but here they've asked us to do the tax implications as well. How many marks is that? It doesn't say. 10 marks. So journal entries for 10 marks. Then for 1 and 2. Then for 3 and 4, they want you to disclose the information. And if we look at what 2 standards are being covered by 3 and 4, it's IAS 8 and IAS 37. So it's some kind of provision or contingency. And then we had seen an error and a change in estimate in question 1, wasn't it? So I think here what we'll see in this question is a change in policy. Remember I said to you they always ask everyone. They always ask a change in policy, an error, and a change in estimate, usually, or 3 in different questions. We seen last week the change in accounting estimate, and we had seen also the an error, a small error. So I think this one will be a change in policy. Look how many marks? 24 marks for 2 items of disclosure. So it looks like it's 2 notes, unless there's more than one thing in each paragraph, isn't it? So 1 and 2 is journals, 3 and 4 is notes. Then it says, prepare the retained earnings section of the statement of changes in equity. And you'll see that they say comparative figures are required. So when do we do statement of changes in equity? We do it when we have the change in policy or the error, isn't it? We do it when there's a restatement of prior year retained earnings. So if you recall, there's that restatement. Let me show you actually. You've got your books. Let me show you what it looks like. So if you... I don't know why I put that back. If you look in your study guides, what they were there is on page 87 in your study guide. So have a look on page 87 in your study guide. You'll see that it will have page 87 at the top as of changes in equity in your study guide. Do you see it? So this is what they're asking for. They're asking for you to do the retained earnings section of the statement of changes in equity for 5.5 marks with the comparatives. It looks like that. So it will be the balance as previously reported, and then a change in policy, and then a restated balance. So it's that change in policy that you're looking for. So that's 5 marks. And then they ask you to disclose all the relevant tax and inventory items. That's funny. Did we do inventory in this module? No, huh? That's very strange. Disclose all the relevant tax and we didn't do inventory. We don't do inventory. Mind you, this is also because of the change in policy. For 5.5, it's the change in policy. So the change in policy adjusts the inventory balance, and this is just asking you to, and they want it. Disclose all that. So it's not notes, hey. It says disclose, but it shouldn't say disclose because it's not notes. It looks like it's the statement of financial position. So they want the statement of financial position, and they just want you to put in the tax and the inventory items. Okay. It shouldn't say disclose, it should say present, because disclose is notes. But they didn't say notes, they didn't say disclose the notes. So they've said statements of financial position. So they basically want you to put inventory and tax in the statements of financial position. And remember that we have SARS and we have deferred tax, isn't it? So we would have one or the other. So that's part A. So big part A. What you can see is that required A is just for 1 and 2. Required 2 is just for 3 and 4. Required B. But then required C and D seem to be all-encompassing, isn't it? Required C and D seem to maybe have everything mixed up because of how it affects retained earnings and how it affects the tax and the inventory, especially the tax. And then part B, which we'll come back to just now, talks about shares. We're going to do part A first, and then just says, from the information supplied above, calculate and identify which market is the most advantageous market. So they've given you a number of markets where these global shares trade, and you decide which one is the best one. It says that they trade both on the JSE and the New York Stock Exchange, and they talk about transaction costs, and they talk about the prices that it's trading at, and they give you an exchange rate. So this is a calc. It's actually a nice fair value question, hey, because it's a bit of a calc instead of like that very detailed theory stuff that we often see. Okay, but we're not going to worry about big part B. We're going to worry about big part A. So remember, the way that I like you to approach the question is to set up your format. So you're going to leave a page for journals. Then you're going to set up notes. You're going to leave I would leave a page for notes. Yeah, it's likely that your note will be a change in accounting policy note, but it's very easy for you to figure out if it is or not. And if you just scan through the question, when you see this, it's a change in policy note, isn't it? Look, FIFO, LIFO. So you can set up a skeleton change in accounting policy note for inventory. If you look on that page 87 that you were looking at for that statement of changes in equity, that page also has that skeleton note. So you set up that changes in that note, and then you leave space for this number 4. This number 4 is a whole lot of claims. So I imagine that there might be some provisions, there might be some contingents, right? Then you're going to, so that's for B. Then for C, you're going to set up that retained earnings statement of changes in equity from page 87, the format. And then for D, you're going to set up a statement of financial position. In fact, they have one. Do they have one? No, they don't have one in that question. I was going to say they have one in that same question that we've been looking at. But no. So you're going to set up a statement of financial position. Let me see if I can find one. No, just P&Ls. Just lots of P&Ls. Okay, but you know what a statement of financial position looks like. You set up a statement of financial position, and you put in inventory as a current asset, and then for tax and deferred tax, you put it in as deferred tax as a non-current liability, and SARS or tax payable as a current liability. Okay, and then we'll see what we get from the information. So how many marks is this part A? So we can do a time check. Okay, part A is 85 minutes. 85 minutes. So by the time we all finish and we debrief and go through it, I think that'll be today's lecture to finish this paper, right? We might have a bit of time to do a little bit of something else. Oh, mind you, we still want to do part B. 85 minutes. I'm going to time you. So on my computer here, the time is now 8:48. 8:48 plus 45 minutes. 85 minutes. 8:49. It's just changed. Yeah, what is 85 minutes? It's 1 hour 25. So that's 9, 10, 50, 60, 10, 15, more or less. Yeah? So that'll be But I'm hoping it will be quicker than that too. You can work in pairs if you like, or in groups. I'm going to work in Excel while you work on that. If we just go through, we can go through quickly. But remember the approach. Now I'm going to leave you to do it. Set up your formats. You'll see that that's what I'm going to do first as well. And then I'm going to start reading through the question. And as I read through, so I will start to do my calcs. Because calcs we do right at the end, isn't it? So set up all your required, put your calcs at the end. Then as I do my calcs, I will then come and fill in. Yeah. I don't answer by required. I answer by the way the information is given in the question. So if they give me point 1 first, I go and put point 1's information wherever it belongs. Okay. All right. So for step 1 is to set up the formats. So I'm going to work in Excel from 2012. I didn't put the whole story, but your story needs to be basically what they've said in there. You just write that down. You don't have to copy what I've written and print it. So you can just check what you've done against what I've done. Once we've gone through it, if there's nothing else that you want to change, then I'll print. Can you see, that cost of sales entry, I'm not quite sure what the other side of it would be, but they said they hadn't accounted for it, isn't it? So then we would have to account for it.
But then this is about something about consignment stock, but then you never know what to do now. Because we have to declare it as a sale, so we have to stay in.
Oh, consignments. So we haven't recorded the sale. I don't know if you want to assume that we have recorded the cost of sale or that we haven't recorded the cost of sale, but if we haven't recorded the sale, the only thing that makes me think whether that cost of sales entry has already gone through is because if I now have to adjust my inventory down by 520, I'm going to land up with no inventory because the only inventory I have is 300,000. So I'm not sure if it's sitting somewhere separate. So I don't know if I must ignore it. If you
market appreciated, I think that's sufficient.
So anyway. Change in accounting policy. Was relatively easy, right? Just be careful with the words, eh? Inventory went up, so cost of sales went down. But only because this number is going up. If this number was going down, it would be an increase in cost of sales, eh? So just be careful with the wording. Okay, so inventory could still be going up. So I could have still said inventory goes up by 36 and inventory goes up by 25, let's say. Those are still both increases in inventory, isn't it? But the movement would have been a decrease, and then that would cause cost of sales to go up, not to come down. Okay, so just be careful with that. But in this case, it's a decrease, it's an increase in inventory, an increase in the deferred tax liability, and then on the other side, it's a decrease in cost of sales. In fact, do you know what? When I look at this now, it was actually a deferred tax asset, wasn't it? The number that's there is a deferred tax asset. Am I right? If the number that's given, you guys are not there yet. Oh, okay, carry on. So this would actually be a decrease in a deferred tax asset is what this is. Because it's actually a deferred tax asset, the number that's given. And I had it as that, and then I changed it, and I'm going to go change it back again. me see how it's going. You're struggling along. Exam is only in June, so you have time. You okay? Okay, you okay, Paul? You okay? Getting there. And you are finished?
No.
Okay. Are you stuck or are you okay?
I don't think I know fully what's going on here.
You don't think you know enough?
Yeah, attempted, yeah, first part.
Mm.
But the basics, yeah.
Okay.
I left out that piece there.
The text, yeah.
Just I got wrong. I just amended now. Because I did a 60 as a separate, yeah. Is this what holding tax or is it just tax?
It's dividends.
Dividends tax.
Yeah. The tax.
Definitely
It's a dividends tax, but it's not our dividend tax.
Yeah,
The company doesn't pay a dividend tax. It's the shareholders' dividend tax.
But then
So in my books,
paid
it's
by the company and no longer in the hands of the shareholders. I'm just confused about it.
paid
Because I
by.
remember last time I got confused with this thing, yeah. That's 15%. Because then, isn't it withholding tax? As a company, we withhold 15% and then we pay it over to SARS.
We pay. Yes, that's what it is.
So, but you just say dividends tax.
No, you don't say anything. I don't say anything about dividends tax.
Oh,
It's not the company's dividends tax.
Yeah,
It's
no,
the shareholders'
the
dividends
shareholders
tax.
that must pay.
From the company's perspective, it's just a liability that you owe SARS.
An
That's all.
expense or something.
No, it's not an expense at all. How do you want to do an expense? You're paying a dividend, 400. In your books, it's a dividend. That's all it is, 400.
Okay.
The other side of it is that instead of paying that dividend of 400 to the shareholder, and the shareholder pays SARS, you have to give him the smaller amount and pay SARS. It's like PAYE. Yeah. You don't put PAYE into your books, right? You put expense, yeah, employee, you put salaries. So yeah, you're just going to put dividends in your books. Dividends. It lands up in statements of changes in equity, dividends paid. That's it. The actual tax on it is the shareholder's problem, but you're going to pay it on his behalf to SARS. SARS says you must keep it back and pay it to them, and then when the person submits their return, they must sort it out. But otherwise, you got that. Last year we raised 65 as a provision. Then this year it gets brought forward as 65. Be careful with provisions because they ask you to do a comparative always, isn't it? So the note, this is the format of the note. Balance at beginning, provision raised, amounts paid, amounts reversed, balance at end, or unused, they sometimes say, balance at end. And then a story. Okay, that's the format. A story and then a movement. It's a movement note, just like the PPE note. So we start with prior year. They always ask for comparative, usually, for provisions. So prior year, we would have started the year with nothing. We created a provision of 65 for that claim from the employee who got injured at the team event. And at end of year, we would have ended on that 65. Then in the current year, we start on the 65. Of that 65, we paid 60, we reverse 5. And then there's the second claim, which is for the customer that ate the chocolate with the nuts. Yeah? And so that claim is for 133. They think that we will be liable because we didn't have anything on our packaging. And so that's the balance at the end. And then there was a contingent liability. This one is where the advisors are of the opinion that the claim will not succeed. Yeah. So when we saw the previous claim, the first claim, the advisors were of the opinion we would have to pay, isn't it? That was for the employee. The second one, it looks like we didn't even went to the legal advisors because we knew we were in the wrong, isn't it? So that one we provide. The third one, we went to legal advisors and they're saying, no, we think you're okay because there were signs and everything up saying that the floor was wet. So that one is just a story. Just a story, yeah. Contingent liability note is just a story. It's just as much information as you've got about what happened, and then also an amount, if possible, of what the amount would be that you would have to pay. But in this case, that amount is nothing.
Now, if you copy and paste most of what is
Yes, you just do that.
that's it.
Yeah. Copy and paste most of what's in the information. For all of these, you saw this one here also, they all have a bits of story. This one here also had bits of story, isn't it? You write what they write. Whatever they tell you, that it was management's decision to change from LIFO to FIFO and the reasons why, you write that. That they couldn't go back to 2012 because of the computer virus, you write that. So then you write it could only be changed from 2013 onwards. Okay, so all of that is in the question. That bit's in the question, the bit about the two claims is in the question, the bit about the contingent liability is in the question. Okay, then part C was a really funny one. They asked you to do statement of changes in equity, but then we had a change in policy that didn't go into the statement of changes in equity because we didn't have a 2012. What would normally be here would be the change in policy of 2012, but then we didn't have a change in policy of 2012. Oh, so it was a bit weird. So the numbers were pretty much all given, like that one was given and that one was given. And then the only entries that hadn't been adjusted in the books was 1 and 2. 1 and 2. 1 was the consignment. So all I did is I put the profit after tax on the consignment into the profit number. Okay, so if you look at the profit number that you were given and you look at the profit on the consignment after tax, the profit on the profit number that you were given was what? Give it to me, Nathan. Yeah, the current year's profit. 592. 234. Okay, then do you agree I made 130,000 on the consignment? And then I had tax. What was that tax number? You even corrected it for me. 36,400. Okay, that's how I get to that number. Okay? They said to you the only entries that haven't been put in the books is 1 and 2. So this is 1 and here is 2, the dividend. Yeah? And the dividend, as we've said, it's the straight 400. That's what goes into our books, a 400 dividend. And then I show that I have to pay it, but not all to the shareholders. Some of it to the shareholders, some of it to SARS. Yes. No, I took it and then I took 28 off. So I'll end up with 72. Yeah. Okay. So I took 28 off. I added it and then I took 28 off. Yeah. Same thing. Yeah. Same thing. Same thing. Yes. I'm sure it's the same number. It comes to the 93, which if you add that to the 592 gives you that 685. Yeah. Okay. So that was that statement of changes in equity. You know, I think this question threw you more because you kept looking for what are you supposed to do and there was nothing, isn't it? Like when I did it, I was like, is that all? I've missed something. I felt like I had missed something, like there was stuff missing. But do you agree? That's it. That's the statement of changes in equity. It's exactly the numbers given, and the only thing that they said they haven't yet accounted for is number 1, which is that consignment stock, and number 2, which is the dividend, and I've adjusted those two. Yeah? Then number D asked you to do the statement of financial position. And that was all given. The numbers were all given. I didn't understand really what the issue was there. You maybe had to read T accounts. I mean, I don't know, I was a bit confused. Because on top of it, they said to you, they've made all the adjustments, isn't it? They've made all the adjustments. I've made one adjustment. I've adjusted the tax number for the tax, what is that number? 36,400. That's all I've done, is I've adjusted it for that 36,400. But other than that, the numbers are exactly as they were given. So if we read the T accounts, T account for SARS, opening balance 31. Closing balance 12. Yeah, so that number is 12. Then for Namibia, opening balance nothing. Closing balance 83. And then I took this 95 and I added the 36,400 and I got to the 131,400. Yeah, that one was given. If I look at the deferred tax balance, opening balance, it's an asset. Do you agree? 8120, it goes as a non-current asset. Closing balance is also an asset. 24,640, it goes up there. And then inventory, it's the new numbers. 380, 375, it's the new numbers, the new inventory numbers. Normally we would have a 2012 column isn't it? We saw it when we did the written assignment, I think, or one of the assignments we had something like that. We normally, when we have a change in policy, have 3 years balance sheet, 3 years financial position. But they said to you that they only want 2 years. They said in that part D, comparatives are required only for 2013. And they just wanted that. So that's like such an easy 7.5 marks. It blows my mind. But I think I know when I was doing it, and that's what would have happened to me in the exam, I'd be going like, oh, it can't be just this. It can't be just this. It must be something else. And I kept wanting to think I must adjust for all the things that they've told us in the other paragraphs. But when you look at the paragraphs, they keep telling you the numbers have already been adjusted. The numbers have already been adjusted. In fact, I wasn't sure whether this opening balance had been adjusted for tax. So I checked it, and even that had already been adjusted, isn't it? I checked it. I put in the provision. What was the provision? 65, isn't it? We had a provision. Tax balance would have been null. And then for inventory, we had 375. For tax, they had 3. They would have had LIFO. So they would have had 339. Is that right? So we had that. They would have had LIFO, 339. And guess what? When I do that tax at 28%, I get an asset of 8120. So it had already been done. So like everything had already been done. It was just reading numbers off the account and putting them together. First year, it's not even first year. It's trick. I don't know what it is, isn't it? But it throws you when you see things like that. Okay. All right, so I'll print that out for you then. This one, so if we just go back and look at this question, if we look at it holistically, the question had a little bit of revenue, some dividends tax, a change in accounting policy, and then some provisions, isn't it? That's all it had. And if you looked at each piece on its own, it was very doable. The dividends tax was quite easy. The revenue adjustment was quite easy. It was just recognizing revenue for consignment stock. The change in accounting policy was not difficult. It had the 2012 year that we normally see, the 3 years. This time we didn't have. Otherwise, they all look the same if you practice enough of them. The provision, I think, wasn't too bad to work through. So there was nothing too bad. The first required I thought was fine. This one I thought was fine, B as well. And then it was just required C and D that were a bit strange, because we don't normally see these things as required, isn't it? We don't normally in this module get asked to do a statement of financial position. We don't normally get asked to do a statement of changes in equity. When you do get asked, you start to think that there's lots of things that are going to adjust the numbers, but it turns out they really just wanted to see if you could prepare one. Because maybe it's that, there's that one section of work which is IS1, which is presentation of financial statements, which I just skipped over. I said, that's just knowing how to present a balance sheet. So maybe that's what that was. Not sure. All right, so then, what time is it? How much time do we have left? 10 minutes. Part B. Part B just asks you to calculate which is the most advantageous market. So I'll just work through it with you, and then I'll print it. You guys can go and have a look. So they said to you that you have 50,000 shares they're trading in New York Stock Exchange and in South Africa Stock Exchange. And they said transaction costs are 3% and 2.5%. I went and worked out at the numbers times the 5 million. But actually what you could have just said is in South Africa, it's 70 Rand. And I pay a 3% transaction. So it's 97% of 70, which is in rands for one share in South Africa. The price is 70 Rand times 97% is 68 Rand. Okay, so that's on the JSE. On the New York Stock Exchange, the price is $6. And they pay 2.5%. So I'm looking at 97.5% of $6. So what does that give me in dollars? 585. Okay, and then I have to multiply by 11 Rand 50 to the dollar to get it into rands. And I get 67 Rand 28. Do you agree? So which one is the more advantageous market? It's the one with the best price, isn't it? So it's this one. And that's the calculation I did here, although here I did the calc for the 50,000 shares. But, yes. But what happens is that you will go and you will sell your 50,000 shares. The person will sell it for 70. So the person who's buying it pays 70. But then that person who sold it for you will charge you a transaction cost, like a commission. It's a commission for doing the deal for you. Because you can't go do the deal directly with somebody. You have to do it through a broker. Yeah. It's like brokerage fees and yeah. Okay. So that's that's that one. It was 5 marks, wasn't it? The most advantageous market is the one with the highest price. But remember, when we're doing fair value measurement, we first look for a principal market. Because these shares are trading on both markets, then if they're trading on both markets, it's difficult to tell which is the principal market. Agreed? Then you look for the one that's most advantageous. Yeah, if you can't find one principal market, you look for the most advantageous market. So in this case, it's like that. They're trading in many markets. We look for the most advantageous one, which is the one with the highest price. If I'm trying to place a value on the shares, then if I times by 50,000, in the Joburg exchange, it will be 3.395 million. On the New York exchange, 3.364 million. So obviously, this is the price I'm going to use, or this is the fair value I'm going to use when I'm measuring. And now you see it in 3702, because in 3702, we remeasure shares, listed shares, and they give you a price, a fair value. But now we are working out which fair value to use. When you get to honors, they put it all together, and they give you this information in that question, and you have to figure out which number to use. So I'm